Hi, I'm Justin, and welcome to the Landis Look, where we take an inside look at the world of real estate. Today, we're going to take an inside look into what's happening in the mortgage industry, and a lot is happening. And we're here with Mark. Mark, welcome.
Thank you. Thanks for having me.
Mark has been the #1 lender in Georgia for a long time, so he's going to give us an expert's view of what's actually happening. And I don't know if you guys are like me, and you're seeing all sorts of mortgage headlines in your news feeds. That may be because Google and Facebook's artificial intelligence know that the only articles I read are Falcons, Hawks, Braves, and real estate articles. So maybe that's why I'm seeing more than the normal person. But I'm seeing all these mortgage headlines about rates are the lowest they've ever been. Rates have risen the most in one day they've ever risen. People don't have to pay their mortgages for months if they lose their job. Mortgage lenders are going under. I mean, I'm seeing like such a wide variety of articles. And Mark, I mean, give us the scoop and maybe start with interest rates. Like, what has happened with interest rates and what is the current environment?
Yeah. If nothing else, they've been very volatile as I can remember them being. And the headlines are generally correct in the sense that they have gone up and down in a hurry. Initially, of course, the kind of scare of all of this and the equity market selling off did cause interest rates to fall very, very quickly. That did not last long. And there's a lot of debate as to why maybe that happened. But in any event, they went up pretty quickly right after they had a far fall. So they fell as low as kind of the high twos and 30-year fixed rates. Almost as quickly as they fell, they shot up with really odd pricing, such that it was tough to even get a normal rate quoted on certain days, to the high threes or low fours in certain situations. So to have a 0.5 to 1 point move is completely unprecedented. So they have since settled down, though. About 2 weeks ago, the government announced they were going to start buying back debt. So they're going to start buying back treasuries, mortgage-backed securities. And they have been doing that. They have been purchasing those in an effort to stabilize and lower interest rates. The initial effort didn't make too big of a move. It did stabilize rates some. So then they extended the amount of money they were stating that they were going to invest to buy down interest rate debts, other debt products. And in doing so, they have stabilized interest rates back into kind of the low to mid 3 range. So they haven't been nearly as volatile the last week or so. So they're back to a pretty healthy place at this point, and they've been fortunately staying there with more familiarity at this point.
So they're not on the all-time lows anymore. So I'm sure that was a crazy couple of days for you with people trying to refinance. But they're not on that level anymore, but they're also not, a point above that either. They're back into kind of like the area we've seen in the recent past.
Yeah, and really they're in an area that's fantastic. I mean, other than those few days when they really dipped down, they're basically at the lows, which has maintained over a few periods over the last couple of years, but they're back to a phenomenal point right now.
Awesome.
There's some oddities to it in the sense that if you have a different type of loan, maybe a lower credit score loan or an investment property, those rates still are a bit higher than we're historically used to. But for kind of normal 30-year fixed purchases, they're still really great.
Awesome. So we've seen a little bit of stabilization now after tons of volatility. Another thing that I'm seeing headlines about, and that I think could obviously be hugely helpful, what about being able to defer your mortgage payment if you've had job impact or income impact? What's happening with that?
Yeah. So in general, mortgage servicers have been pretty reasonable with coming up with deferment options. Obviously, there was some more or less mandates issued from the government to say, hey, this needs to be allowed for, and we need to put a stop on any foreclosure activity for a little while. Yeah. I can only kind of specifically speak to what we've been doing as a mortgage company or our servicer. Because of just the volume of questions and just attempts to defer mortgage payments that have been coming in, they've tried to streamline it. So they have a website that you can go to, and a lot of companies have gone to this, where you can enter your information, your situation. Within a reasonable amount of time, they're responding. And there have definitely been plenty of situations where they are allowing you to defer your mortgage payment 90 days. Effectively, what it's doing is it's allowing you not to make payments for 3 months and just extending your loan term for 3 months. So if you had a 26-year loan previously, you now have a 26-year and 3-month loan. So
Yeah.
No real expense. You're kind of just delaying cost or delaying the interest. And it's allowing people kind of a few months to have a little additional cash flow by not making a mortgage payment.
So if your income or job have been impacted, there is no, I mean, I can't see any downside to doing this, right? Is there any downside to this?
There's really not, unless you just, absolutely had some sort of goal of having your mortgage paid off by a certain date, or you were going to retire by a certain date and now you're throwing a few months on. But otherwise, from just normal perspectives, no, if you've had some sort of income or job impact from what's happened, it's a nice benefit for sure.
Can you do this on personal residences and investment properties or just personal residences?
Yeah, you can submit the form for investment properties as well. So if you've had income loss or some sort of job issue, then the form it's open to any sort of mortgage that you have at the moment.
Awesome. Man, that could be hugely helpful for folks. And so what you're saying, you guys are currently seeing a 3-month deferment is what your bank's currently doing.
Yeah, and I think that's what most of them are all doing at this point is a 3-month deferment.
Yeah. So anyone watching this, man, if you have been impacted, no harm in submitting to do this. It sounds like a good amount of them are getting approved. And so, I mean, go to your bank, get this submitted, and give yourself a little breathing room here over these next 90 days. That's huge. What about I'm also seeing headlines, which this seems crazy because it seems like, hey, there's all these refinancers, there's all this mortgages taking place, but I'm seeing headlines, lenders may go under because of what's happening now. How could that be? And how does that impact the normal person?
Yeah, absolutely. Yeah, it's been interesting times because with all this change, there's not the processes in place to account for some of these things that are going on. There's a whole kind of variety of potential issues mortgage lenders are having right now. Some of those include some lenders are having to deal with verifying employment or income stability after closing, which they're not used to having to do. So that kind of adds a whole another risk factor for them to account for. Also, for the most part, depending on how your bank or lending institution is structured, a lot of lenders have to keep some sort of capital reserve requirement for the loans they do or for warehouse lines of credit that they might have. And the reserve requirements that they have at this point for a lot of these lenders have skyrocketed, especially on specific loan types. So there's been a lot of news articles about how the Fed buying down rates has put a lot of mortgage lenders in jeopardy of not being able to do business because of how that impacts how they basically are required to have reserve requirements held or capital requirements. So it's a scary thing at the moment for a lot of lenders, specifically those who maybe don't have a bank backing where they're an actual deposit institution. For most banks or deposit institutions who have some sort of bank backing, it's probably not an issue yet, but there's a substantial portion of the mortgage world that is not a bank, does great business every day. It's a real challenge for them at the moment, and it's something that will have to be worked through for a lot of these mortgage outfits.
Man, and that definitely sounds tough. And I know yesterday we were talking through, we've gotten a good amount of just comments and questions from our clients and friends saying stuff like, well, I heard the pricing on FHA has gone out the roof, or they're not doing jumbo loans anymore at all, or if you have a low credit score, you can no longer get a loan. And you were telling us that that is a byproduct. Well, I'll let you tell it better than I can. Tell us why people are saying that and how they can overcome that.
Yeah. For specific loan types like FHA or other government loans, for jumbo loans, there are a lot of lenders that right now are better off not doing those loans. So what they've done is they have priced them such that no one would ever take the loan at the moment. And the reasons vary. Some of them are those capital requirements. Some of them are the post-closing requirements, but net, it's just a total risk. It's a total risk factor, whatever those risks may be, to doing those loans right now for those lenders who may not be capitalized to do those. Historically, they would have been without a problem. They were doing business fine 6 weeks ago on all these sorts of loans, great rates. And now it's a real concern for a lot of them. So that's why you're seeing that I'm getting calls all the time right now where people are telling me, hey, I got a quote on FHA rates for 5%. What on earth is going on? And if you get a quote like that, it's not that their rates probably are really 5%. It's that they're basically saying, we'd rather not do this business right now. So there's a whole variety of business like that. But with that said, there is a whole portion of the mortgage world that is not having any of those issues at the moment, and they're not going to in the foreseeable future. So that basically will allow them to keep doing business as normal. For the most part, if they have a bank backing or they're connected to a bank or depository institution where they're not going to have these capital requirements, or they can keep loans on their books such that they don't sell them immediately. There's a whole variety of potential risk factors that a lot of banks won't have right now. So you can definitely still get normal FHA mortgages. You can definitely still get them on traditional credit scores that we were doing six weeks ago, and you can definitely still get general loans. You just right now, definitely more so than ever, I don't ever remember a time like this, you have to be talking to a specific sort of lender to have all of those offerings like you would have historically had them. So
Yeah. Awesome. That's great info, Mark. And for everyone listening, I mean, just to reiterate, all of those loan products still exist. And as Mark was telling us yesterday, they are still doing all of them. And things are basically the same as they were before all this turmoil and volatility. And so if you're looking to get one of those loans, you definitely still can. Don't be discouraged by anything you hear out there or any headlines you read. You definitely can still do that. Obviously, you send us a message. We can happy to connect you with Mark. He can help you with that as well. And so, Mark, we really appreciate your time today. I mean, it is kind of crazy that all of this has happened in such a short period of time, but there's so many crazy things happening right now. I guess this is just kind of par for the course and what's happened in the mortgage industry. So we appreciate you walking us through all of this. If you guys have any other questions, anything we didn't hit here, do what so many of you do. Drop us a private message or send us an email. We'd be happy to get your specific questions answered. And Mark, once again, thanks for your time.
yeah, my pleasure. Thanks for having me.
Awesome. All right, everyone. We will see you next week.